I'm Nicola Sladden. I'm the Banking Ombudsman, and it's wonderful to introduce Tim Hope, who's a Cantabrian by birth, born and bred, to be here to talk about what we do. So in terms of what we do, we resolve complaints between customers and their banks, and as Virginia has very nicely outlined, we do that through a number of ways, and ideally we're trying to resolve them by negotiation and achieve a settlement, but in some cases we can't get an agreement between the parties. In those circumstances we issue a formal decision which is binding on the banks. We deal with over 3,000 inquiries each year and probably investigate about 200 actual disputes. And as so many New Zealanders have some interaction with banks, as Virginia says, most New Zealanders have interactions with financial services. We are helping a lot of New Zealanders each year. So just to start with, I'll introduce Tim, who will take you through a case study.
Thanks, Nikki, for the introduction, and thank you all for being here today. So my name is Tim Hope. I'm here to present our first case study, which, as you can see, relates to loan protection insurance. So in this case, the complainants, who we'll call Mr. and Mrs. C, took out a loan protection insurance policy in April 2010. Later that year, their house was damaged in the September earthquake, and they received an EQC payout, which they applied to the loan, reducing it to $80,000. Unfortunately for them, their house was then damaged in the February earthquake and ended up being red zoned. They accepted another EQC payout and also took out an additional loan, which they used to purchase a new property. In doing so, they maintained their existing insurance policy. However, it was only for the original loan of $80,000, not the new total lending of $200,000. The bank wrote to them and explained that they would need to complete an acceptance form and pay additional premiums if they wanted to increase the cover. However, they never returned the forms. 5 years later, Mr. C died. At the time of his death, the value of the original loan was $65,000. Mrs. C made a claim under the policy and the bank reduced the loan by that amount. However, she believed the bank should pay out the entire balance of the new loan, which at that stage was $160,000. The bank declined, so she brought her complaint to our office. We reviewed the policy and considered that the bank had in fact paid out the correct amount. The policy made clear that increases to the loan amount were not automatically covered and that they would need to contact their bank if they did want to increase the cover. Since Mr. and Mrs. C had not returned the required forms, the policy had never been increased to cover the lending. However, in this case, the bank recognised that Mrs. C was in a very difficult position due to the earthquakes and subsequent loss of her husband, so made a goodwill offer of $15,000. We considered this was a very generous offer in the circumstances and encouraged Mrs. C to accept it, which she did.
I'd also like to share a very sad story about an older couple, Mr. and Mrs. B, who were in their 70s, who got caught up in an investment scam and ended up losing their life savings. Mr. and Mrs. B were contacted out of the blue and provided an investment opportunity that sounded too good to be true, and in fact, indeed, it was. They, it's often easy to think, how could someone be entrapped and caught out by these scams, but they're incredibly sophisticated, use a wide range of social engineering tools and tips and tricks, and anyone, you and I, our family, could be victim as well. So in essence, they were an older couple. They had worked hard all their lives and had some modest savings and a term deposit. And when they were approached about this investment, they, over the course of a number of weeks, withdrew their funds and broke their term deposits. They went into the bank over the course of 7 weeks at least 8 times and continued to withdraw small but increasingly bigger sums. So initially they took out $10,000, they went back the next week and took out $15,000. And when they'd exhausted their savings, they ended up then actually going to the bank and seeking a personal loan for $10,000 and going back the next week and getting an additional loan, each time because the investment company made a number of excuses and explanations as to why additional funds were required, whether it was for tax reasons, to pay some administration costs to release the funds that they had invested. Then there was some foreign charges. There was also some talk about court fees to release the funds because they were caught up in some... I mean, it was just such a sad, sad story. Finally, their son caught on to it and the scam and the fraud was revealed. And obviously they felt very embarrassed and ashamed, but the family encouraged them to raise their concerns with the bank because they felt, why didn't the bank alert them to the risk of the fraud? They had had a very settled transaction history in the past. They'd never lent money before, and all of a sudden their savings were drained and they were taking out loans over a 7-week period. And the withdrawals were all done in cash and sent off through Western Union. So it had many of the hallmarks of a classic scam. 1 minute left. Gosh, I better race on. And anyway, we looked at it and we found that it isn't standard banking practice for banks to inquire as to why people are breaking their term deposits and spending their money. People are entitled to do what they want with it. And the explanation the customers said was for holiday and banks. They didn't reveal that it was for an investment. And even if it was for an investment purpose, it's not for the bank to inquire what they're investing in, etc. But in relation to the loans, all banks are required to be responsible lenders. So they looked at whether or not it was suitable or affordable. And while we found that the first loan was suitable and affordable, we were concerned that they didn't make further inquiries in relation to the second loan. It was just too unusual to come back a week later and say they needed more money in those circumstances. So we were able to, in that case, recommend, and the bank agreed to refund half the amount of that final loan.